I think about like the media, right? So always think about what is their agenda, right? So
they're always right.
Of course. But no, they want us to be off center, right? They're trying to pull in our psychology because they want us to be checking in and viewing, and that drives ratings up, and then they can sell the advertisements. If you have cash on the sidelines, this is a great time to be pacing it in, right? Buying at strategic opportunities.
Coronavirus and our economy, 4 things you need to be doing right now, how to be successful in this crisis, and what to anticipate in a bear market. I'm Mark Hayes, here with David Witter, a certified financial planner and the owner of Financial Harvest, and Jason Schmidt. Jason is the president and broker of Stockworth and the author of the Schmidt Report. Guys, you're on the trenches. I don't even know how you're here, right?
Interesting number of days here.
A lot of people are seeking your counsel. First, tell our viewers how the two are linked.
Yeah. So I think of the equity markets as being a leading indicator, right? It's very liquid, millions of transactions a day. And what people are doing is they're pricing in future profits or expectation of future profits. So we've seen a big decline in a very rapid amount of time.
Wow, Jason?
And real estate tends to be our lagging indicator because real estate transactions, opposite from equities that are instant, take a long period of time. So a real estate transaction may be 30, 60, 90, 120 days out on close from contract. So we're seeing things close today that went into contract months ago where sentiment was very different, outlook was very different, and just general conditions were very different. So what we'll see 30, 60, 90, 120 days from today will be different than how we thought about it that time in the past.
Right. David, what should we be doing right now?
Yeah, 4 things. 1 is guard your narrative. 2 is think about tax loss harvesting. 3 is Roth conversions. And 4 is either adding capital or rebalancing. And we can dive into this if we need to.
Okay, the narrative.
Yeah, I'd think about like the media, right? So always think about what is their agenda, right? So
they're always right.
Of course. But no, they want us to be off center, right? They're trying to pull in our psychology because they want us to be checking in and viewing, and that drives ratings up, and then they can sell the advertisements. But they're not organized around us taking care of our families and our viewers taking care of their families. That's not their agenda.
We've seen one day the coronavirus is bad for the market, real estate. One day it's good. Jason, what have you seen?
Yeah, well, I mean, we've seen some tremendous seesawing back and forth. We've gone from, in the early phases, this being a little blip, a slight decline in the market, it's going to lead to an explosion, all the way through to the other side where it's just going to collapse the market and the whole world is going to fall apart. I think that the balanced view of this is being objective about the information we have available to us, watching what's actually happened, and then finding that right spot in the middle between those two extremes on the most likely outcome and how we move from kind of this uncertain moment through how we're going to progress into the future where conditions are a little bit more certain and more predictable.
I love in your 4 things you talk about, being calm and being successful in this, and I think understanding the narrative is very important. Let's go number 2, tax loss harvesting.
So we've been doing that strategically already for our clients. So that's where we actually will sell positions at a loss, capture those losses, and then put it in a like-kind position so you're not out of the market. And the reason that's so key is you can be capturing large losses today that can offset gains not only this year, but you can carry it forward to offset future gains. So it's a great strategic planning opportunity right now for tax mitigation.
Now, you just said a lot, so I just want to tell our viewers, you do a webinar, you cover these things in deeper detail, right?
Without a doubt, yeah.
Okay, did you have anything you want to add to that? Or
No, I mean, I find that pretty interesting. It's kind of like not the same, but a similar approach to how we think about a 1031. And
that's right.
And how we're going to try to adjust tax position based on current conditions, current strategy to grow into the future.
Sure. Well, and this is how they relate, right? So if we capture losses on the investment portfolio side, meanwhile they have a real estate transaction that's producing a gain, we could wipe out some or all that gain, right? And so that's why it can be very strategic to be doing that right now. It's not common knowledge. We're finding when we bring it up to our clients, they're like, "Hey, thank you for taking care of me." It's hard to think strategically when things are falling like they are right now.
Roth conversions.
Yeah. So if you think about it, when we do conversions, we move equity positions out of pre-tax retirement accounts over to Roth. And the reason it's so strategic, if you have a 40% discount, you're paying the tax on that 40% discount to move those equity positions over into Roth, and then all the future gains once the rebound and recovery comes is all tax-free.
Now, I know a lot of our clients are very sophisticated. Are you hearing questions in the trenches about these kinds of issues?
Taxes not so much, but value sheltering is really important right now, especially from the builder side, where, because real estate transactions are generally much further out than a lot of other transactions. Building is even further out, because you're buying a piece of dirt, you're 12 months, 18 months, 2 years from the time you close on that dirt to when you've got a product to sell, and then best case, you're 30, 60, 90 days out from there. So you could be 6 months, 9 months, a year from dirt to final product. So when things happen like this in the market, people are trying to shift their risk position accordingly into different areas of the market, different pricing segments, so they can have a better expectation of outcome and return, so that they're not bearing losses for months and months at a time and wipe out any potential profit that they were supposed to have achieved if it were not for these outside extraneous forces we're seeing right now.
Which brings us to rebalancing.
Right.
So let's walk into that.
Yeah, so if you have cash on the sidelines, this is a great time to be pacing it in, right? Buying at strategic opportunities. It's very, very difficult and unlikely to time the exact bottom, right? But if you're putting in capital as it declines, you know in the long run you're buying at a 40% discount for where it was just a few weeks ago.
Right.
So it really sets you up to future success. And then when we rebalance, that might be where we're selling fixed income that it maybe recently hasn't lost value, and then buy a little bit of equities. So those are things that we're doing recurrently with our clients.
That's great. That's great. Let's move on to number 2. You had mentioned how to be successful in the crisis.
Yeah.
Let's unpack that.
Yeah, so I just call it virtues to be successful in a crisis like this, right? And the reason is if you're going to make good decisions, you got to make sure that you're centered, right? So that's what I started with. It's like being centered. And what I mean by that is what matters to you, your family, your career, your business, and be thinking about, okay, what does this look like? Not just right now, but 2 months out, 2 years out, right? And then secondly is this being forward thinking, like thinking ahead, thinking out in the future. Long horizons of time will set you up for better decisions. Remaining calm, right?
Yeah.
Hard to do at times, right?
Right.
And then I said being faithful, and we're not talking necessarily it can be spiritual, but more importantly is like, why would you believe that there's going to be a recovery? And the way I like to think about it is us as human beings are so adaptable. Like we can adapt very quickly. We can come up with new products, new services, new ways to help people.
Well, kind of to your opening point on being mindful of the narrative, the news is doom and gloom, and it's a nightmare, and the sky is falling every day in all sorts of different ways every day. But a lot of business owners and those operating in a lot of different businesses are, focused on the long term, focused on the success of their business, focused on the success and health of their employees, and it's not so much buying into all of this fear mongering and getting everybody riled up. It's staying centered, being focused, like you mentioned, and being mindful that we're working towards a common goal and a common good for the benefit of all of the people we work with, and not to buy into so much of this noise and mess.
Yeah.
Well, Dave, I got to say, David, when I first called you, you didn't go doom and gloom. You immediately started saying, think about this, and I kind of got optimistic, like, wow, you can be successful. And I think back about the real estate markets. You and I started together back 2003-04.
We saw a big...
Yeah.
And you got to have a positive narrative rooted in facts and good advice. And so that's why I love having you around, because you do always think long term.
Yeah.
And you think about your generation, but your parents' generations and your kids. You need someone calm to kind of walk these issues.
Sure.
So anything else on this topic?
Well, I've heard too in real estate, right? They say you make your money in real estate when you buy.
That's right.
Right.
Yeah.
And the way we would say about that is when the equity markets have a big decline, the expected returns going forward are actually higher than they were just a month ago. That's just the data, right? So it's like, okay, I can get higher returns if I'm willing to invest when things are tough.
So let's assume we're going into a bear market. what can we anticipate?
Yeah. So we have a little graphic there that you take a look at, but I'll average it out for you. So the average length of a bear market tends to be, from the equity market's perspective, tends to be somewhere around 15 months. We're very early in that, and not to say that it'll last 15 months, but the average decline is somewhere around 40%. We're pretty much there. But the key is the recovery, right? And when it bounces, the rebounds are aggressive. And we got a little graph for that too. That's why you can't be out of the market, because when the rebound occurs, it comes back fast.
Yep.
There were days in 2009 when the markets are up 8 or 9% in one day. So you got to be fully invested to capture those.
Yep.
Jason?
Well, real estate has a little more, because in real estate, we have to be, time is the qualifier in every decision we make. When your entrance is going to dictate generally your exit. So, we always have the adage, particularly in real estate investment, that you make the money when you buy, not when you sell, right? So we're shared in that sort of structurally the way we think. Real estate is a little bit more nuanced, I'll call it, in that all of the different extraneous forces that affect individual people and families can drive decision making a lot more and play into fear-based decision making or staying on the fence, not seeing things through. So in housing, we need to compartmentalize the need product, the want product, and what we need to do in order to make that decision with the most informed and real information as possible. The hot button today is buyers who are under contract are trying to compartmentalize everything from, do I advance a force majeure issue and try to get out of a deal because I'm scared of what's coming and I'm just trying to just pull the ripcord in any way I can, through to being as very calm and balanced as you can and say, well, this is a short-term thing. We're going to get through it. I'll suffer the short-term pain because I'll have the long-term gain. But because real estate isn't as liquid, let's say, as other types of investments, we tend to have to people want to make very fast decisions, but it's hard for us to do that. And what I often tell people is that in order to really give you the best advice, I need all of the information about your situation. Generally, that's in concert with a financial planner, an accountant, an attorney, depending on what we're talking about and where we're maneuvering, so that we can, using the time qualifier right up front, give everybody the best information so that long term they're going to be in better shape. Sometimes with real estate, it's the nature of the beast. Sometimes you take it on the chin a little bit up front, but sticking in for the longer term, because it is not as mobile and liquid, say, as a share of equity. That can lead us to making the right decision and giving people the right information to make the best long-term decision. I want to unpack
that. So I come to you. Walk me through some of the information, what you need from clients. And are you taking on new clients now?
We are.
So walk me through that. Walk me through coming to you to get your advice.
Yeah. So the foremost is just understanding their current situation, where they're at now, where they're trying to get to, and begin to do some gap analysis. And we don't just focus.
This is in person, or can they go to your website and give you that information?
Well, look, right now we can do it on a video, right?
Right.
Using video conferencing, but or meet in person. So just really understanding where they are, where they're trying to get to, begin to do some gap analysis. And there's 5 key areas that we're focused. Number 1 is making wise investment decisions over many decades. Number 2 is mitigating taxes to keep more what they earn, save, and invest. 3 is protect.
I love that one.
Yeah. We do a lot of tax planning, right? 3 is protecting their assets from being unjustly taken. 4 is taking care of their loved ones, right? Transference of wealth.
Yeah.
And 5 is charitable impact, right? For those that are charitably inclined. So we're really just questioning into those areas and seeing where they're at and where they're trying to get to.
So if I call you, just to let our viewers know, how long would that take? What would the first call, an hour? What does that look like?
Yeah, probably about an hour. The discovery meeting is what we call it. Yeah, just understanding the background.
Now tell us about your webinars.
Yeah, so we've got a live one coming up on April 3rd. And what we're going to be looking at is the previous 10 bear markets to get a little bit deeper dive in terms of context and what to expect. We're going to talk a little bit more about those 3 strategic things we're talking about now with the tax loss harvesting, Roth conversions, and the rebalancing, and when is it appropriate to do that and where is it relevant. So those are some of the things we're going to be covering, and we'll have Q&A, so we'll be able to take some live questions as well.
You should think about using our studio for that. That'd be fun.
Yeah, that would be.
You mentioned before we started, you said you also do second opinions and stress tests. Walk me through that.
Yeah.
Stress tests.
Stress tests.
Walk me through that.
No, what we found is sometimes, especially the more affluent, they say, yeah, I got my strategies in place. But what we find is when we really understand, okay, what's your intended outcome, and then we'll use our expert teams, meaning in tax and legal and asset protection, we'll stress test their current strategies to ensure they actually fulfill their purposes. And a lot of times we'll find 2 or 3 gaps, and that's key, right? Because it's what they didn't know that they didn't know is where they can really get caught. So that's what the stress test looks like. And the second opinion is that discovery meeting, just understanding where they're at and we're trying to get to.
Gotcha.
Yeah.
Jason just had an article published in Forbes, and you're working on another article. When will that article be out?
It's a little bit contingent on the Forbes publishing team, but in the next several weeks, I'm sure.
Guys, we're going to wrap this up. Last, best advice for what to be doing right now before we close the show. What do you do today? What's right now?
So, I mean, this is true for your viewers, too. If you think back to previous bear markets or declines, how many of them did we recover from? All of them.
That's right.
Yeah.
Great advice. Jason?
Yeah, for real estate, I mean, I shouldn't limit it to real estate, but in general, people make decisions emotionally. You have... when we talk about negotiating, right, we talk about positions of fear and positions of greed, and depending on what side of the fence you're on, how those come together. In this particular circumstance, people are operating out of fear of losing investments, fear of losing their retirement, fear of losing income, all sorts of things. When we feed the fear gets bigger. I mean, this is almost every circumstance in your life where you think about a time you were really, really scared, and think about how productive that fear was.
Right.
It's often not.
It's a great point.
Right.
So
you're optimistic.
I'm very optimistic.
You're optimistic.
Yeah. And it can be really hard. So I'm not sitting here up on my soapbox saying that this is some easy thing, just don't be scared. But approach your situation being calm and rational and reasonable. Get good advice. Be objective in the way you're making decisions. Some people may need to take a loss on certain things, but it's because you're doing it strategically and with good advice, good counsel, good guidance. But don't just get scared, pull the ripcord, dump all your investments, move on, cash out. Almost always that's never the right decision to make, and you need to be making those kind of decisions with qualified, objective counsel around you.
Sure.
We're looking hour by hour when to jump back in to the market. So will you take my call later today?
Absolutely.
You've been very generous with your time today, David. Thank you for coming. Will you come back?
Yeah, absolutely. We'd love it.
All right, guys. Thanks for watching. And if you have any questions or comments, you guys will answer anything they post on social media.
Sure. Yep.
This is going to run on multiple channels. Guys, thanks for watching. And come back here every day, because we're going to be doing shows every day. Right, Jason?
Until they tell us we can.
All right, David. Thanks so much for watching.
Well done.